Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I do each and every week, I've left my lines on the chart so you can see how my forecast played out and whether or not the support and resistance lines have held as well. So this diagonal line is the forecast that I made last Friday, and as I zoom in here you'll see that again this was the day the market report went out and I said that we would move lower, and that's exactly what we did. The market moved down. It didn't go down as aggressive as I thought it would, but it did move down, and the volume is picking up on the green candle. So there's some mixed signals here this week, but I'll still go out there and make the forecast for what I think will happen next week. This is the gap fill point down here. This minor gap right there is something that I think will be filled. So what I'll do is I'll erase these lines here, and I'm going to use this as my new target and my new support level. So if I draw my diagonal line now, it's going to look something more like this. I think we're going to move lower towards filling that gap. So I'll leave that in place for next week. If you look at the Russell 2000, the Russell 2000 did the best out of the major indices. And you can see again, I left my lines on the chart. I said that we would move up to test this resistance line, and we did. We actually went a little bit further than I thought we would, but we didn't yet pull back. So here's what my forecast is going to be for next week in the Russell 2000. We do have markets moving periodically against each other. Not every time do we see the markets working in concert, but I think that because this is a minor bullish engulfing pattern, I think we're going to go back up again to test that resistance and then eventually pull back. So that's my forecast. Keep an eye on that, and you can stay in tune with the market guys. Now, if you look at the spiders, that's ticker symbol SPY. It's the S&P 500 index ETF. I did say that we would move lower. We did slightly, nothing to write home about. But what I'm going to do here, I still think that we're going to move lower. What I'm going to do is draw this line just like that, and I'm going to hold this role reversal support line intact the way it is, because that's the point that we have to keep our eyes on. If the markets break down below 212 on the spiders, it could easily go down to 204 to fill this gap down here. So that's my forecast for the spiders. If you look at the Qs, which is the NASDAQ market, it's represented here in the PowerShares QQQ. We are at a level of resistance already. There it is. This is a major topping pattern back here where we had a double top, and the resistance is being tested once again. If I zoom in, something interesting has happened. We have a doji right there. It looks like a small cross. We normally don't see that many dojis forming in the major markets, but we have one here, and it's on red volume or a down volume. I think that the Qs, even though Google went up on earnings, it wasn't enough to carry the NASDAQ high enough to break through that resistance. I think that what we'll see next week is a minor pullback off of that resistance. So keep your stops in place. I don't see a major collapse happening next week, but I do see a pullback, so you want to protect those profits. Finally, the VIX. I love the VIX. It's a leading indicator. It's what I keep on my watch list all the time. I refer to it quite often, and you can see that my forecast line hasn't actually played out in full, but it did move. This week it moved exactly how I said it would. I said that the VIX would first pull back to test this support level, which is a 3-year support level, before going higher. So we have a bearish engulfing pattern on the VIX. I think we could still go a little bit lower to test that mark that I have there from last week's forecast, but eventually I think the VIX will start to move up. So I'm not going to change these lines at all. I'm going to leave that in place, and I think the VIX will play out just as you see it here on the chart. So if you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com. That's our front page right there. You can click on the video tab. That brings you to a library of free videos we call Market Shots. This will give you a lesson at a time in about 5 to 7 minutes. There's lots of information here, particularly the rubber band effect. I've put this out to all of our subscribers this week while making a recommendation for a couple of trade candidates. And this is something you want to pay very close attention to in how stocks diverge from the moving averages from time to time. And when that happens, that gives us some key entry points, and it also gives us some exit points for setting price targets. So that's what we do at The Market Guys. We educate, and we do it with passion, and we do it with a lot of care, and you could just click on those tabs and search around The Market Guys website. So have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what The Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.